Earnings were down 54% from the same quarter last year.
All right, let's get Stuart Plesser in on this conversation. Equity analyst, Standard & Poor's. He joins us now with more on J.P. Morgan. What did you make of the call this morning?
Well, I mean, Jamie Dimon is certainly a straight shooter, and the numbers were good, but he cautioned that there could be storms ahead, and I think it's a good cautionary stance.
All right, so but wait at this. The street doesn't see that, though. The street sees that these guys are oversold, that these financial stocks have been shorted, beaten down, trashed around. You've got people coming in saying it's time to buy them.
Well, I mean, let's go back a couple of days and just set the bar for where these reports are coming in. I mean, we had the GSE news, we had the bankruptcy of IndyMac, and then who's next, and then as long as these players are coming in and saying, look, we've got earnings, and in JP's case, they were stronger than consensus. Obviously, the market is happy with that. So, this is coming from a very low bar and a very big fear factor. But I'll add that we have a strong buy recommendation on JP, as they are one of the stronger players in the banking space.
So you've got a buy on it.
We have a strong buy recommendation on the stock. But I said that there's not, this doesn't mean that the worries of what's out there is suddenly just gone. I mean, that's what I just want to stress.
But are we seeing capitulation, James? I mean, I've heard that word used a few times in the last 48 hours.
We're all looking for it. The only sign that I've seen is that the volume in the XLF Financial Spider Select ETF has gone really through the roof in the last couple of days. And that's the only thing that's really pointing us this way. I agree with Stuart that these companies from a share price point of view are probably tremendous buys. But yesterday's price action really smells of short covering. Nobody's buying at 3 o'clock in the afternoon on a day when these stocks are up 12%. Not for the long term. They're covering shorts.
But you can't short these stocks forever, Sandra.
I mean,
that's the problem.
You can't short the stocks forever. And the other thing to note, that when we do see the gains in the market today, there's some strong volume behind these, indicating that these aren't just people coming in and buying back the shorts. There's actually buyers stepping in at these levels. But my question to the analyst actually was, you started out by talking about Jamie Dimon, and I think that's really interesting because I've been talking to people all day. Wall Street loves Jamie Dimon. I mean, he's a colorful, charismatic character. How much of his leadership goes into your current buy rating on the stock and your optimism about the company?
Well, I would say that the state of the balance sheet of J.P. Morgan is probably a direct effect of Jamie Dimon's take on the market and his cautionary stance. I mean, this is an extremely well-fortified balance sheet that he has there, and it may not show in the quarters ahead. It depends on the provision levels and the write-downs. But the market share that these stronger players like JP are gaining are really spectacular. And so once the credit issues go away, and I use that word once they do, these kind of banks that are gaining in this market are really going to be powerful in terms of the kind of performance that they could give at that point.
I want to throw out something really quick to everybody, just real quick. I'm seeing this headline cross on UBS. They just told the Senate panel that they're going to shut down their Swiss-based services for U.S. clients. Stuart, is that because they do not have faith that they can make money in the U.S. services anymore, or do you think that's because of the headlines that we've seen crossing today and yesterday about American money being hidden and avoiding taxes in overseas accounts?
Unfortunately, I'd like to give you an answer there, but it's just not under my coverage universe, so I just can't.
All right, let me go back to J.P. Morgan. One more question about that, and this new rule the SEC has on the naked positions on Monday when it goes into effect. Does that have any effect on the pricing today and maybe short covering? Any relationship?
Well, I assume that, it could come into effect, but I would more look to what I mentioned earlier of the fear factor that was out there set on Monday with these, that the world was basically coming to an end to, okay, at a company's just in business reporting earnings, there's a big step from there, and I think that the relief rally has a lot to do with that as well.
Stuart Plesser from S&P, thank you so much. We appreciate it. Thanks for the analysis and the on-the-cuff information.
Yep,
thanks. Good to be here.
Well, at first glance, new housing numbers